Good afternoon, and thank you all for being here with us today. We started the financial year with a strong performance in Q1 across multiple dimensions, including broad-based revenue growth, expansion in operating margin, strong large deal wins, and strong cash generation. Our revenues for the quarter grew 3.6% sequentially and 2.5% year-on-year in constant currency terms. I'm particularly pleased with 7.9% growth in the financial services segment, where we are seeing improvement in client spend in North America. All geographies and most industry groups grew sequentially. Volume growth turned positive after several quarters. We had another strong quarter of large deal wins with 34 large deals at a total contract value of $4.1 billion. Our clients see us as a preferred partner of choice in consolidation, cost takeout, and efficiency opportunities. This is also a reflection of our leadership strength. With the mobilization of our margin program, we see positive impact on operating metrics. This resulted in our margin expanding by 1 point sequentially. Free cash flow was highest ever at $1.1 billion. We continue to see strong traction from our clients for generative AI programs delivered through Topaz. Enterprises are focused on their own data sets that can be used in generative AI large language models that create huge impact for them. Along with our overall robust performance in Q1 and strong opportunity pipeline, we are seeing early signs of improvement in financial services vertical in the US. While discretionary spends continue to be under pressure, our highly differentiated offerings around driving efficiencies at scale and the transformation capabilities around generative AI have positioned us well in this market. With respect to our recent acquisition of Intech, we have received the required approvals and have closed the acquisition transaction. Given our strong performance in Q1 and our current outlook, we have revised our revenue growth guidance for the full financial year to 3% to 4% growth in constant currency terms. Our operating margin guidance for the financial year remains at 20% to 22%. With that, let's go ahead with the questions. Thank you.
Thank you, Salil. We will now open the floor for questions. Joining Salil is Mr. Jayesh Sangharajka, Chief Financial Officer, Infosys. With that, the first question is from Ritu Singh from CNBC TV18.
Hi, here, Ritu from CNBC. Thank you for the question. A huge upgrade in the constant currency revenue guidance, 3 to 4%. So firstly, while you highlighted in financial services in the US, you're seeing some signs of a pickup. Overall, what is your sense on discretionary spend coming back? Where are the verticals you continue to see weakness? And was all of this upgrade organic or, have some of your past acquisitions that you've now completed had some role to play in this upgrade that we're seeing? Also, your margins are up about 100 basis points over the previous quarter. I just wanted to understand, is there headroom for further growth when you're expecting to take the wage hikes, etc.? And just one more question, if I may, on your headcount. As we've been asking you for the past several quarters, now 6 quarters it's been coming down. What are your hiring plans for the year? If you could just throw some light on that.
So thanks for your question. Let me start with the first one. On the guidance, the way we see what's going on in the market and our guidance, first, we had a strong performance in Q1 on volumes, as well as the point that we made on financial services in the US. Second, we had a very strong performance on large deals in Q1, which gives us more visibility into this financial year. And third, we completed the Intech acquisition, which also helps us in this guidance. And Jayesh will give some color on the specifics with Intech as well. On the margins, Jayesh, for you.
Yeah, so if you look at this quarter's margins, we have already expanded our margins by 100 basis points. If you look at the put and takes of that, almost 100 basis points came from last quarter's normalization. Last quarter we had one-off, which impacted our margins. We had 80 basis points coming from Project Maximus, which is our margin expansion program. on the back of, better pricing, which is value-based selling, better benefits from our efficiency pyramid, which is utilization, etc. And 40 basis points came from one-off benefit that we got in this quarter from one of the clients on revenue side. So those were the positives. On the headwinds, we had 1.2% coming from better variable pay and higher leave and other costs, resulting in almost 1% margin expansion for the quarter. The project Maximus, as you know, has been we are working on it for last couple of quarters, and it has started showing results. Our long-term, medium-term objective on that is to expand margins from where we are. This year's guidance continues to remain 20 to 22%. Coming back to your last question on the headcount, as you know, last multiple quarters we have moved to the agile hiring base. That basically means we hire freshers both from the campus, off the campus. This quarter we had a 2,000% net decline, which is lower than the previous quarters. Our utilization is already at 85%, so we have little headroom now left. So, as we start seeing growth, we will look at hiring. We are looking at hiring 15 to 20,000 freshers this year, depending on how we see the growth.
Sorry, Salil, just to follow up on the first question. When you say the Intech acquisition also played a role in you upping your guidance, could you give us a clear breakup how much of it is coming organically and how much inorganically?
Sure.
So if you look at, we don't break up guidance, first of all, between acquisition and non-acquisition, but if you look at the disclosure that we made when we acquired Intech, the annual revenue of Intech was around 170 million euros, right? So you can, in a way, back calculate, but we don't really break up how much of guidance is between, organic and inorganic.
Thanks, Ritu. The next question is from Haripriya Suriban from NDTV Profit.
Sir, could you give us a broader sense on the demand environment when it comes to other regions than Americas? And what is happening on the pricing bit? What has changed since the last quarter? What gives you the confidence in terms of upping the guidance?
So on the, I'll go the first point on the demand environment. In other regions, so what we see, which we've continued to see, good growth. First, sequential growth was good across all the geographies, but we see good demand in this sort of an environment in the European market where we've had good traction, and we've also had some of our large deals ramping up in that environment. Equally, in what we see in the US or the North American market as well. So both of those we're seeing good traction on. Jay should also give a little bit more color on industry later. And the second point, go ahead, Jay.
Sorry, what was the second point?
The second point on the pricing.
So pricing environment has pretty much remained stable. But if you look at, again, one of the pillars of Maximus is value-based selling, where we've been able to make an impact, which has helped us, improve our overall pricing. But overall environment has continued to remain stable. Coming to the sectors that Salil wanted me to talk about, if you look at financial services, as Salil mentioned earlier, the US financial services, we have started to see some recovery, especially in the cards, payments, capital markets areas. Manufacturing continues to remain strong as a sector, but our manufacturing growth we expect this year to be lower than the last year, because last year we had a very strong growth in manufacturing. Retail and EURS remains similar to our commentary earlier, and high tech continues to remain softer.
Thank you. The next question is from Veena Mani from the Times of India.
Hi, gentlemen. I have a few questions. Some of your peers who had the same sort of set of numbers, with some positive growth, could give us an outline only up to the next quarter, on what things look like. What do you think the next few quarters of this financial year would be? Would you be able to give us, tell us a little bit more about the, how the macro environment is going to be like and the deal environment is going to be like? Secondly, I wanted to ask you about how your internal fulfillment goes. IJP is a huge thing at Infosys. So would that be a focus going on? Or would you again go back to the market and hire extensively, not just freshers, but even laterals? And the other thing is about Maximus. So you've called out in your annual reports that the cybersecurity is not as adequate as you would want it to be. So are you going to expand that coverage? What is it like you're going to be doing on the cybersecurity front? And with the maximus incident, does it make it even more pertinent for you to add to your cybersecurity measures? These are three.
So let me start with the first one on the macro. On the macro, I think the sense we have is the discretionary spend, which is a function of macro as it impacts our clients, is still the same as what we were seeing in the past quarter, with the exception that we saw a little bit better outcome for financial services in the US. But otherwise, it's the same. So it's a discretionary is still low from where it was several quarters ago. Now, to see beyond, so the way we do this, like at this time in the start of Q2, we'll have an outlook of what we can see into the environment over the next few months. We don't have a view which is, let's say, what will happen at the end of the financial year and so on. So that's how we are seeing it today. But as we see, as we've done now, as we see any changes like what we saw in financial services, we then at the end of the quarter come back and update things on that. On the second point on IJP or the fulfillment, I think the view is we've always look at fulfillment from what we have. As Jaya shared, our utilization is looking at a fairly good level. We will still have fulfillment internally, but we will also potentially, as we see the demand, have recruitment both on campus and at other levels as well. On maximus, I think we issued a statement on April 18, 2024. In addition to that, we've completed the e-discovery process has been completed, and maximus is in the process of coordinating with its clients to ensure all the notifications are provided. In addition, the US state attorney generals and insurance commissioners have also been notified. That's what we can share with respect to maximus.
Thank you, Veena.
If you like this video, then like, share and subscribe to ET Now.